All right, what's up, guys? Welcome to the fifth episode of the Living Off Charts private mentorship. We're still going over bias and framing a trade, and this episode is going to cover the one shot, one kill. Now, what is the one shot, one kill, and what is our objectives in the one shot, one kill? So, one shot, one kill is catching the weekly expansion for the weekly candle. And what is our objective on the one shot, one kill? We are looking to anticipate just the very next weekly candle. So we're not looking way into the future. It's just the very next weekly candle. We're going to be looking for price to trade from a premium to discount or discount to premium if you're bullish, from external to internal, internal to external, or to trade to clean highs and lows in the form of equal lows or relative equal lows or highs. So now how do we frame the one shot, one kill? So as you can see on your screen here, this is how we're going to frame it. We've got the economic calendar. This is going to help us in determining the high and low of the week, or when a distribution or accumulation is going to take place. We're going to look at the weekly profile, which is one of the most important things when you're framing your one shot, one kill. Premium and discount, internal and external range liquidity. We're going to be looking at IPDA's 20-day look back to make sure we're in a deep premium or discount. We're going to focus on a key level for the high or low of the week to form. We're going to be looking at the weekly open. If we're bullish, we're going to be buying below. If we're bearish, we're going to be shorting above. We're going to look at a previous day's run. We're going to look at the candle closure for confirmation, SMT, and then H4 and or H1 CSD to give us the entry and confirmation that the high or low of the week is in. Now, as you can see on your screen right here, we've got the bullish weekly profile. And when we're bullish, we're going to anticipate the high or low of the week to form in the first 3 trading days, Monday, Tuesday, or Wednesday. This is going to occur 70% of the time. And what we're going to focus on is a Tuesday and or Wednesday low of the week. How we come to which one it will be depends on the higher time frame key levels and the economic calendar, because that's the roadmap to the one shot, one kill. Here we have a TGIF, which is capping the weekly range. So every candle has an open high low close or open low high close. And if you watched the IPDA video on how to navigate price, this should make sense to you right here. Bearish weekly profile. 70% of the time, the high of the week is going to form on Monday, Tuesday, or Wednesday. We're going to be focusing on Tuesday and Wednesday. Now the bullish TGIF. Right here you can see a schematic of the bullish TGIF. So this is once again just capping the weekly range and looking for that open, low, high, close scalp. Now here we have a consolidation Thursday reversal. So this weekly profile usually forms when Monday, Tuesday, or Wednesday has no significant news drivers, and then Thursday has a high impact driver. We can see Monday, Tuesday, Wednesday consolidate, Thursday run the low, and then Friday expand. Just like we see here on the bearish example. Monday, Tuesday, Wednesday consolidates, Thursday runs the high, and Friday expands. Now these three actually different profiles are the main profiles we're going to be focusing on. Now they are more, as you guys may know, in ICT's arsenal. However, these are the 3 main profiles that we're going to focus on. If you just focus on these 3, that's going to be more than enough for you. All right, now here you can see a gold blank monthly chart here, weekly chart, sorry. We're looking at the first drive here, second drive here, and then we have a third drive here on the weekly chart. So when we see this, we could anticipate a reversal to occur here. Keep in mind, this is a weekly chart, so these are weekly candles. We have offset distribution at external range liquidity. So remember the multiple things we need to be looking at when we're anticipating the weekly candle. And external range liquidity has been taken here. Offset distribution, you guys should remember that from the last episodes. And now, how are we going to anticipate the candlestick to form? So let's go back here. Over here, we can see this candle that runs into the third drive here. We could be anticipating a reversal. Now, what do candle formations look like? We have three candle formations. We have an expansion here. So this is a bearish expansion. This would be a bullish expansion. We have a reversal and we have a consolidation. So as you can see here, we have a reversal candle formation. So it opens, it trades a lot higher, and then somewhere around the end of the week, it could be Wednesday, Thursday, or Friday, you could see a hard reversal. So your objective for the weekly is the very next weekly candle, you're to anticipate one of these three. And there's only these three. There's no other candle formation you'll be focusing on. As well as that, you're only going to be focusing on two of these three, which is an expansion or a reversal. We don't want to be trading a consolidation. Now, we have that reversal candle formation, as you can see here, also running a previous weekly high, going into the third drive here. Offset distribution, this is that external range liquidity. And now we can see Wednesday high of the week. That's this candle here. Now, external range liquidity has been taken here. So where should your eye go? Internal range liquidity here. So this, you can look at this as a weekly objective. So this should be your one shot, one kill objective, this FVG right here. Now, the economic calendar, this is going to be one of the most important things when it comes to the one shot, one kill. It's going to let you know where your highs and lows of the week will form, what day, or where the distribution is going to take place. So we can see here on Monday, Tuesday, we have some USD news and prices pumping up higher into the external range liquidity. We're waiting for this to get taken. Wednesday, we can see there's no news here. However, there's an SMT with silver. And then Thursday, we see a hard expansion down. Previous day high ran here. And we close inside. So I want you guys to look at this here. I've written candle closure. This is where the confirmation comes in for the weekly candle. So when you've anticipated whether the weekly candle is going to be bullish or bearish, we're going to be looking at the candle closure on the daily chart to let us know that price either wants to continue or reverse. What we're going to do next is we're going to map the previous, count back 20 days from the previous day. So if you look at this day here is the day we're looking to trade, we're going to count back 20 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So in the past 20 days, starting from the day before your trading day, what is the lowest low and the highest high? If you're shorting, you want to be shorting in premium of that range. If you're bullish, you'd want to be buying in the discount of that range. Now that we have identified that we're in a deep premium, we're above old highs, we've gone into a key level, we've ran the previous week high, we're in an IPDA 20-day premium, we're above the weekly open as well, and now we've had candle closures signifying to us that price could be reversing here. What's one of the last steps we've got here is SMT. This lets you know that smart money is in the market. As you can see here, now we have the 4-hour chart, and this is that weekly objective, which was the internal range liquidity. And this right here is the high of the week, which is Wednesday. So I want you to look at this right here. This order block here that could be anticipated as we closed below here. This up close candle here is not as significant as this up close candle here. And why is that? Due to time. Okay, so now we're looking at a 4-hour chart here, and the 4-hour and or H1 is going to be used to frame our entry on the one shot, one kill. So this right here, we go above the third drive, and then price trades lower here, closing below this up close candle. So some of you may be looking at this and asking yourself, why is this not the order block? Why does price run up one more time before it closes below this up close candle, which obviously you can see here ends up being the CSDOB that takes us into the weekly objective? The reason for that is this is not a high probability order block, whereas this is. So now what makes a high probability order block? They form at a key time. So a change in the state of delivery does not happen until a key time. This candle right here, where the high would form, 10 p.m.'s candle in Asia. This is not significant for a USD based pair. This candle right here is 10 a.m. So this is the New York session. This is a key time where the delivery changes from bullish to bearish. Forms at a key level. That's that third drive here. That's our key level. Form above the open, as you can see right here. This is the weekly open. Forms above it. Runs liquidity and has an FVG with it. So we can see this liquidity here and the overall external range third drive. It runs into that. We close below and we increase probabilities when we have a fair value gap with it. Now, we don't always have to have a fair value gap with it, but the fair value gap does increase probabilities. And what we can see from there is a retracement back into the OB and a sell-off to the internal range liquidity, the weekly objective. Now, if we were to trade this 4-hour OB, and this is what I want you guys to realize, when you're trading the one shot, one kill, the expansion of the weekly, you can use this to scalp. You can just use this for bias of the upcoming week, or you could use this for an entry and trade the weekly expansion. Most people will tell you that you won't get enough RR if you just trade the H4 or H1. That's complete nonsense. You need to know what you're doing and know what you're looking for, which is what I've given you in this video. And if you were to trade this just on a 4-hour chart, we've not even dropped to a 1 hour yet, on a 4-hour chart from the OB's low, so not refining it to the open or 50%, just to the low, realistic entry to the internal range liquidity, that's 4.4%. That's more than enough for the week. And you can see this is Thursday and this right here is Friday. So if we were to zoom into the hourly chart, we could refine our risk even more. However, when you do go to a lower time frame, you sometimes might miss a trade. So you have to look at the higher time frame and the lower time frame and see if the higher time frame gives you enough RR. You might as well go with the H4 for a little bit of RR extra, which here it's 0.2%. I don't think that's significant. That's not worth potentially missing the trade opportunity. So I would stick with the H4. You have to be a bit malleable with that and see what works for you and see what works with your risk parameters. And back to the economic calendar, which is the roadmap. This right here on the hourly chart, this is that CSDOB, which occurs on Wednesday. Yes, there is no news event, but there is SMT here as well with silver. This is our CSDOB, and take note of which day in the direction of our weekly candle, that bearish reversal candle formation, which has the biggest and largest move. Obviously Thursday here. The reason for that is the economic driver here, sending price lower, increasing, injecting that volatility. Now I want to take you guys into the very next week. So what we went over was this candle formation here, the bearish reversal. Now we have the next upcoming week here. Now we have a close here, which is a candle closure confirmation that we could see lower prices here. This candle would be dubbed as a distribution candle formation. And that's this right here. Now, if we go back to our checklist, we're going to check everything off. The weekly candle, that right here, this is Monday, Tuesday, Wednesday, Thursday, Friday. So once again, we have a Wednesday high of the week. Where does the high of the week form and where do we anticipate it? In a higher time frame key level, this OB right here, above the weekly open, and with SMT at a key time. The key time in this case being Wednesday, high of the week. Equal lows here, that's our obvious draw on liquidity. So our two objectives would be highs and lows as the weekly objective. And when you see lows like this that are exactly equal or relatively equal, we can look at smart money driving price towards that because retail has their stops here. Now, the IPTA 20-day look back, we're going to be using the same idea as the previous chart. However, we're going to be trading this day and this day. So from the day we're trading, the day before is the first day we're going to count back from. So let's count here. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So from this low to this high, equilibrium is around here. Well, it is here. We want to be shorting above equilibrium, and we can see that right here. Shorts above it, above the weekly open as well, into a higher time frame key level. This is extremely premium, guys. Now, how can we confirm this is the high of the week? The candle closure here, where we close inside, confirms that this is most likely the high of the week, and we can trade the next day, or we can trade this day here if you're confident enough. And we can confirm that by looking at the economic calendar and the lower time frame CSD. So once again, Monday here, Tuesday here, no news. We see Wednesday run up higher and Thursday distribute once again. So Wednesday high of the week forming at a key time being Wednesday, obviously, and Thursday distributing with the news. Now, zooming into a 4-hour chart here, this orange line is that OB, our high time frame key level. This right here is the previous week high run for our Wednesday high of the week. We wick this candle here, this up close candle that runs liquidity here into the key level, and then we close below. So we could look at this H4 as the change in the state of delivery. However, in this case, unfortunately, we do not have a return. So obviously this can happen, guys. We could miss our entry. Price might not retrace into the OB, especially if there is an FVG with it. Price could hit the FVG and retrace. In this case here on the 4-hour, no entry. However, if we zoom in now onto an hourly, we can see price run into that key level at a key time being Wednesday at a news event in the New York session here, above the weekly open and above previous week high. Extremely deep premium. And then we close below this up close candle here. This second candle closes below, and I'll zoom in a little bit. You can see the close below here. This next candle open, trades higher, hits the low, and we sell off. Clean lows here, and the relative equal lows on the daily being the weekly objective here. Now, if we were to enter here and place a stop loss above here to trade the one shot, one kill, we would have 3R just until these lows here, and until these lows down here, the weekly objective, we would have 5R. We did not manage to hit them this week. However, at 5.5R, there's no reason you should be holding for this extra bit here and be greedy. You should be taking partials or TP. Alright guys, so that is the end of the one shot, one kill. This should help you guys in finding your bias for the weekly candle. So I hope this helps, and I'll catch you in episode number 6.